A Fed cut this week is considered baked in, but what will the new year hold? Welcome to Market Insight, I'm Elena Casas. There's a 97% chance the Federal Reserve cuts rates by a quarter point on Wednesday, according to Fed funds futures markets. But what will really interest traders is the new dot plot, policymakers' projections of where rates are going in 2025. Back in September, the average forecast was for a whole percentage point of reductions in the course of the year, but that looks unlikely now. To find out why, I'm joined now by Mark Fleming, chief economist at First American. Mark, hello. So rates are coming down then, but not nearly as much next year as markets thought just a couple of months ago. Why not?
That's right. I mean, we are going to get an early Christmas present with the summary of economic projections this week. But if you believe the market thinks at the end of next year, only 10% of the market participants believe that the Fed will do another full percentage point, as they suggested in September. So slower monetary easing next year seems to be the odds-on favorite at the moment.
What are you expecting from the dot plot then?
In this case, I agree with the market, although that's a very risky proposition because the market's often been wrong about these things. But I think, yeah, it's fair. We've had very, very strong labor market growth, continued strong labor market growth, certainly well above pre-pandemic levels. The inflation sort of going sideways. So, less monetary easing, especially also because of the uncertainty around fiscal policy next year with the new administration, seems like a likely bet.
You mentioned that the US labour market seems much more resilient than most economists would have expected. Why do you think that is?
It's somewhat of a conundrum. I mean, we look at, yes, job creation numbers have come down, but they've come down from the extremely high levels of the recovery after the pandemic. We're still generating jobs in the over 100,000, and it used to be that would have been a phenomenal month in any given time prior to the pandemic. So strong job growth. People are actually quitting a little bit more, which is an indication of a belief in the positive market. You don't tend to quit if you don't think you can get a new job. So the labor market has remained resilient, and that's allowed the Fed largely to cut as much as it has over the last couple of months.
The tone that we've heard from Fed policymakers has changed quite a bit in the last month or two, particularly, as you mentioned, since the election, given the uncertainty over policy. Do you think they might be forced to change direction if inflation continues to stay stubborn going forward?
You can never say never, obviously, but I think that's a much less likely outcome than basically just slowing down the easing. And if you think about it, by cutting less is actually maintaining restrictive monetary policy. So you don't have to go into reverse. I think the reverse course would be if we were to have some sort of a recession next year, which is also seemingly very unlikely.
From the perspective of American borrowers, then, this is not great news for mortgage rates or the housing market, is it?
That's true. We're back to, I guess, a new normal for 2025 of a mortgage rate in the mid-sixes. But we must remember that the historically long-run average for mortgage rates has been in the sixes. It's only in sort of recent memory of the last 5 or 10 years that rates have been so low. And we're sort of suffering the consequences of such a low rate environment and sort of returning back to something more normal.
Does that mean, though, that potential buyers who are hoping for more movement in the housing market are going to be waiting longer?
They might have to wait longer, or to say it another way, you're not likely to get a lower rate necessarily, but what has happened is house price appreciation has slowed dramatically. So at least going into next year, you're not losing ground relative to 8 or 9% house price appreciation as you wait to try and find a home.
Mark Fleming of First American, thank you so much for joining us. And that's your Market Insight. Don't forget, you can watch more videos on Reuters.com.